Okay, so the last video that we discussed was the basics of technical analysis. Now that you understand technical analysis in the broader sense, because technical analysis is kind of like a large banner over trading in general, let's get into price action. So, price action analysis is a part of technical analysis. Um, it can deal with things like support and resistance levels, trends, volume, how candles open and close, all those kinds of things. A lot of that I discussed in the previous video. So this video is not going to be as long as the previous one. So hopefully that is quite appealing to everyone because I know that it's quite a time commitment to take an hour of your day, or if you go even 2x speed, that's 30 minutes. I mean, that's quite a bit of time to spend your free time on. So I'm going to do my best to consolidate this, but my goal here is to give you guys and gals, as much information as possible and make it as concise, clear, and digestible as I can. So with price action analysis, um, we talked a lot about that in the previous video. But I'm going to break some things down to basics here, and then I'm going to go through some examples. Um, we're going to go through the daily chart, and later in the video, I'm going to try to do some real-time market analysis that I already recorded, and I think that will be helpful as well. So with price action analysis, the thing that I want you to focus on the most with this is understanding candles, understanding what they mean, and just understanding what that buying and selling means from really the most basic of perspectives. So first, let's talk about that. That's going to be super simple here. So basically, let's pull up a daily chart. I like using daily charts for this. Let's use something like SPY because everyone should be looking at SPY, so that's a good one to look at. So with price action analysis, you need to understand the story behind the candle. So a lot of people look at these things and they draw very quick conclusions from things they see in the market, and they're not really focusing on the meaning behind it. So, like, I'll just as an example, with April 4th here, we've talked about this in other videos, or at least in the last one. This was obviously a warning candle, and a lot of people at the time, and I will admit, even myself included, I got a bit arrogant. I've had a 90% win rate until April, and I learned a valuable lesson. The market can humble you more than anything else, especially if you sit here and you think that you know better. So I'm going to explain why this was a very clear warning sign here and why I was arrogant and didn't listen to it as well as a lot of other people. So let's explain the story behind it, right? So as we can see here, this is the October lows of 2023, and we had quite the nice bullish move all the way into the 520s up until the end of March and the beginning of April. Now, this price action is quite the trend. You can see that there's just some small pullbacks, but we keep heading higher. We keep riding that 8 EMA. That's a very nice move. Now, if you can just eyeball this here, are there any large candles? Like look at the April 4th candle and let's look at all of these previous candles. This candle is much bigger than all of them. Now, that in and of itself is something that should be drawing your attention. That should be a sign that says, okay, I need to understand why this candle is so large and what that means. So let's zoom back in here. So this candle opened this candle opened close to the all-time high, which is not a problem. That's great. Gap up here, whatever. You expect a gap fill when you get a gap up, or you expect a gap fill when you get a gap down. That's fairly common. But what was not common on that day was the selling accelerated through the entire candle and then closed and engulfed all of this price action here. So what does that mean? Like, what's the story there? So the story is, we opened up at the highs. It could not advance above this high. I wouldn't necessarily trust this line here, but just focus on the highs in general. In fact, let me even take this off. So just focus on the highs here, and it's clear that it opened near that level and it could not get above it, and then it sold off very hard. It engulfed all of these candles and closed all the way down here. Now at 4 p.m. Eastern, when this candle is done and finished and the day is over, you have to look at this and you have to think, okay, this meant something. What did it mean? Well, when you get a candle like this, a gigantic engulfing candle, we can even look at how much that was. It opened near 523.31 and it closed near 513.14. So that's like a $10 move. That's a move. That's a move that needs to be paid attention to. So when you have that, that's your story. Your story is institutions could not get through this level. Then sellers took the ball and buyers did not step in and they let it get all the way smack down to here. That's a scary story, but it's an important one. The correct play here was, okay, I'm obviously in long positions from the previous price action the last 2 weeks. If I can get out for a gain or maybe even slightly less, I should in these next few days. Now, I will say this. I took a lot of losses because what did I just say earlier? I was arrogant. I thought that I knew better, which sounds crazy, right? It sounds really stupid. You guys are probably sitting here listening to this thinking, what do you mean you thought you knew better? How that's rookie. That's stupid. And you're right. It is rookie. It is stupid. I made a fatal error out of my own arrogance because I thought, well, I have a 90% win rate. Clearly, I know what I'm doing, and I do. But that does not mean that I can ignore clear price action and clear technical analysis in the thought of I know what I'm doing. So what I could have done here better would be these next 4 days, 1, 2, 3, 5 days. These next 5 days, I can tell you, and I know because I've done the painful analysis, I had opportunities to exit all of my positions for a gain. Every one of them. Because I was in relative strength stocks that held up very well, and I would have exited all of them for a gain. Actually, all of them but one. All of them but one. Which would have been fine. Would have taken a small hit. All the rest of those positions probably would have made it so maybe it was break even across the board. And then I made a couple trades last week, which would have set me in profit. I would have made a nice profit for April. Call it a day. That's what should have happened. I would have made money last month. Not something a lot of people can say. And I can't even say it because I made that mistake. But that's why I'm making this video. I want people to understand that the market is absolute. It does not care what you think, but it gives you the signs. Gives you very clear indication of what it's going to do. There's no surprises here. Like, you could say that this was a surprise, sure. But after you have that information, you shouldn't be surprised by this. You shouldn't be surprised at all. if I can tell you what would surprise me. Well, what would have surprised me would be, let's say this candle on April 5th closed above this red candle, and then the next day we got a giant red engulfing candle. That would be a surprise because that would make no sense. Um, but this made a lot of sense. We couldn't continue here. We were compressing, we were chopping. Then sellers took the ball. They sold off, and then we continued the sell-off. Now we're between the SMA 50 and the SMA 100. Now, I think you get the idea. You want to develop a story. You can develop a story with one candle. You can develop a story with multiple candles. You can look at this and say, buyers have the ball. It doesn't matter if we get a little bit of a pullback. They step in, they bring back the price, and then we continue marching forward. That is the story of this price action here. The story of this price action here is very clear as well. What we have here is we had a breach of the 50 SMA on high volume. We break down, very clear breakdown candle. We continued. I thought we were going to test the 100 SMA here. We did not. We bounced before it, slightly bullish, because if the fact that buyers stepped in before the 100 SMA means that they're willing to buy above it, which is a good thing for the bulls. We bounced up. That was nice. We pulled back a bit. Very understandable considering the fact that it's earnings season, the fact that we do need multiple tests of this level in order to confirm support. All of this is very clear. None of it is confusing or anything. It's very clear. We got almost to the 50 SMA. We almost tested it. We got sold off from that point. What we have here is, let me see, April 29th, April 30th. April 30th was Tuesday. Yes, it was, there was multiple earnings that day, and on that day there was some selling pressure ahead of those earnings, and then the earnings accelerated it further. Then you had yesterday, which was FOMC. So this is kind of the story. I don't do a lot of fundamental analysis with trading because I don't believe it's necessary. But I do think there are some key points that you always need to be aware of. You need to be aware of planned economic events that have a significant impact on the market, like FOMC, like a rate decision, like all those things, like the jobs number, etc. You need to be aware of those things. So with that in mind, you also need to understand what the possible outcomes could be. I can tell you right now that I have been swinging long through every FOMC for over a year. But this FOMC, I was not in anything. I was not in anything. Because, why? So, we had a weak GDP number recently. So, people are going to be looking to the Fed for some kind of indication of what they're going to do next. That's going to tell them, can we possibly be bearish? Can we possibly be bullish? What should we do? So yesterday, it seemed that the market had quite the dovish reaction to what Powell was saying. It got all the way close to the open of Tuesday and then sold off all the way back down to here. And that was quite unfortunate. I saw quite a few people go long and then get smacked for going long. How could you have avoided going long there? How you could have avoided that would have been realizing this. Number one, are we above the high of the previous day? We're not. Okay. Because we're not above the high of the previous day in the market, bulls have not said that they want to get above this level. This level's still intact. This is still serving as some form of resistance because institutions decided that this is a level we should sell off from all the way down to here. So with that being said, I know that ideally I would like to be above that level. That would tell me that I feel much more comfortable because bulls now say, screw that level. We're good above it. We like it above there, and that's good. Now, another problem was we have the 50 SMA sitting here. Now, the 50 SMA is a technical level, not a price level, but a technical level that always acts or can act as support and resistance. So I thought to myself, and I said, do I really want to deploy capital into a position where I have these levels of resistance here? And I said, you know what? I got smacked around recently. I've had some bad choices. Let's not make any risky plays, and let's wait for confirmation. Sure enough, market sold all the way back down. It was very unfortunate, and it happens, but it sucks for the people that were in those positions because I know they had great analysis on those stocks, but the market is the key. You always want to do your market analysis first. If the market doesn't look like something you should be getting long on, maybe take a pause and think maybe I shouldn't get long this stock yet. If the market looks great to go long, could be a good time to get in that stock. That's the way I look at things. Okay, so that is kind of the breakdown of price action from a candle basis. The next thing I want to go through three topics. I want to go through support and resistance levels. I want to go through trend analysis, and then we're going to talk about volume. So with support and resistance levels, this is like bread and butter type stuff. This is exactly what you need to know on a day-to-day basis, and you need to be able to identify these things very clearly. So let's use a level that's been talked about a lot recently. So that would be the 500 level. If I can find it on the chart, that's probably it. That is slightly below it, but let's just pretend that's the 500 level because I'm like pennies off, so give me a break. So let's zoom out just a little bit. Actually, we don't really need to zoom out that much. So with support and resistance, it's not an exact number. Some people try to look at support and resistance and they try to say this is the exact number and has to touch this exact number. If it doesn't touch this exact number, the level is not tested. Now, I don't agree with that. I think support and resistance tends to act like a range, just like this area on the chart. So when you look at this 500 level, what do we see? Let's take a look. So we see this candle here. We see these two candles here. We see this one, these ones, this one, and this one. So let's talk about all that individually. So even if, let's just pretend you're watching this right now and you don't agree with me. You think 500, the 500 price level on SPY is not a significant level. Let's just pretend you think that. Maybe you don't, maybe you do. Let's just pretend you do. Think that it's not a support level. So with that in mind, let's just take a look at this level and let's just observe the price action around it. So let's look at this February 9th candle. So it made it through, it closed above it. Fantastic. At that point in time, it's hard to really say that 500 would be a support or resistance level. And you'd be hard pressed making that argument. The next day, we get another move, which would have been nice. It would have looked exactly like this candle, but instead it sold back down, made a bearish hammer, not good, gapped all the way down here. Okay. So we have one rejection from the 500 level. Now, like I said before, it is not an exact price level. It is an area. So I would consider that to be one rejection. Okay, so now we have February 15th candle, very similar to February 9th candle. We break right above it, we close above it. Nice close. That is the highest close of, let me see what that close is. That's the highest close ever in the market. Very bullish, very nice. Next candle we have, February 16th, sells off below that level. So that's our second rejection from that level. Then we have here two candles on April 17th and April 18th. The April 17th candle tapped the 500 level, bounced off from it, closed above it. The April 18th candle did the same thing. It attempted to close above it. It could not close above it, closed below it. Very bearish. The April 19th candle sold off much further. Looked like it was going to attempt the SMA 100. Did not. Pulled back up, closed right here. You could see here that on the open, it did try to go above 500, sold back down. So we have two candles that tested the support 500 level and saw support there. Then we've got the April 19th candle seeing resistance at the 500 level. Then we have, what do we have again? April 22. We open down here, we go all the way up here, we sell off, bam, not good. And then we close right here, again seeing resistance at the 500 level. The next day we gap up, again, attempts the 500 level. First thing out of the gate, what does it do? It attempts the 500 level. Bounces off from that, goes up. Now we're seeing support at it again. Then we have the April 25th candle, which opened below the 500 level, tested down further, closed way above it. Again, we're seeing support at the 500 level. Same thing as May 1st. We tested the 500 level, bounced off from it. Well, let me just show you this actually. So we got down to this 500 level right here. Then we bounced off from it, set a huge move, and then sold off from it. So that was yesterday. It's a roller coaster. FOMC, not good to trade. So I would definitely recommend never trading over a FOMC statement. So that is why 500 is a possible support or resistance level. Not because I just made it up, not because I just heard someone else say it's an important level, but we can see all of these moves in throughout here that all tested that level. I mean, it's been tested like 6 or 7 times. That is why 500 is a significant level. So I hope that can kind of show you how to find like a significant price level. Now, there are other ways of finding support and resistance levels that are not, as I would, this isn't necessarily difficult to find support and resistance at this level here, but I would say there are ways of finding it that are even easier. So stuff like that would be SMAs. Those act as support and resistance levels. But another thing that's even easier is looking at opens. Let me say it this way. Looking at candles. What do I mean by that? So when this candle opens here and sells off down to this level, that's a significant move. There is something about this candle where you can draw resistance. Where do you think that would be? That would be at the open. So remember, the market decided that it needs to sell off hard from this level. So what would be bullish? What would be bullish would be reversing this and closing above this level up here. So if that's bullish, then this level is going to possibly act as resistance if the bears have control. If the bulls have control and it blasts through and closes above it, who cares? But it's just important to recognize the significance of those levels. Because if you recognize the significance, you can factor that into your trading. Like if I saw, let's say, try to imagine this, but try to imagine, let's say, after this red candle here, there was a close here, a bullish close right here. If I got a close and it closed just shy of this candle, I would not be going long. Why is that? I'd be asking the question, why weren't the bulls able to close above that level? Why did we close just shy of it? That makes me feel like the bears have a bit of control around that area and they're not letting the bulls get the price above that. That would be my thinking, and I'd be saying, okay, I'm ready to go long. I've got my picks in front of me, but I need to see a close above that level. If I don't see a close above that level, I can't really go long with confidence here because there's some type of pressure at this level that's going to cause um, problems. And I look at that in stocks too. People have discussed or asked me questions about how I choose targets and how I filter through trades and things like that. Um, Let me give you an example. Let's pull up Amazon. So with Amazon here, let's think of yesterday because I was eyeing this yesterday. Amazon was an incredible after earnings, showing incredible after earnings strength. I was really impressed by that, and I really wanted to go long yesterday, quite honestly, but just the market didn't support it, so I did not end up going long, and I'm glad I chose that because clearly, the market still has selling pressure, and there will be a better window if the market sets up for that. But let's break this down here. So where is my ideal long, and where is my ideal target? That would be the question you should be asking yourself when you look at a chart like this. So let's pretend the market was amazing yesterday, it closed bullish. Let's say it even closed above the previous day. So we have every checkbox we want. With Amazon here, I want to see a close above these two candles, which I had a horizontal line on my chart that was telling me, or not telling me, but it was showing me because I clicked through all my picks all day just to see where they're at. So I was looking above this level and I had a line here and I said, okay, if it's above that line, I'll consider it. If it's below that line, I'm not going to consider it. So why are these candles significant? So these candles here are significant for the same reason that I just explained with SPY. So institutions clearly at this level decided that that's a good level to sell off from, and buyers could not step in. They didn't fight that, and the stock dropped. Ahead of earnings, in fact, it dropped. I mean, earnings is this candle. It was after hours on April 30th, but obviously we didn't get an open that was affected by earnings until May 1st. That was earnings. So this is quite close to earnings. So institutions decide to sell off in front of earnings. That's not a sign of confidence in what they thought the stock was going to report, or whatever. I'm speculating a bit, but what we know is what the chart has shown us. These candles are all closed here. These candles are all done. They can't be changed. So the institutions opened the stock right here. They could have bought it back up and set it back to the highs, but they didn't. They sold it down. So when I'm looking at the stock price here on May 1st, and it was bullish right here. It was green at this point, right? This red candle didn't exist. It was green. I'm seeing this and I'm thinking, okay, if it gets above these candles here, these two candles, that tells me that buyers were able to get it above that level and institutions like it. Because everything in the market's driven by institutions. If they didn't like it, wouldn't be getting above this level. So it did get above that level yesterday. Again, didn't like the market. That's why I didn't end up going long. But if I did like the market, I would have been long. Now, where is a good target? So the way I like to choose targets, and I don't want to get into this too much because I am going to get into this even further in a later video, so I'm just going to mention this quickly. I like to look at the first level of resistance that I can find. So same concept as wanting it above this level, I was looking at this level. The last place right shy of the high where institutions sold off. I thought, you know what? If it can close above that level, it'll probably retest this level. I'll be able to get out for a profit. That was the way I was looking at that trade, and I thought it'd be a good trade if the market was supporting it. I did not end up taking it. As we can see here, it has some slight strength today, but market's shit, so I'm not going to be taking that trade again, unless the market can do some miraculous thing today, which I have my doubts about, considering we have Apple earnings tonight and we have some economic releases tomorrow. So that is some examples of how I look for support and resistance. There are, of course, more ways of looking at support and resistance. But the point I'm trying to make is when you're thinking of support and resistance, you want to think confirmation. So if you're swinging, even short-term swinging, that means I want to make profit within a week. What you want to do is you want to make sure the candle is closing above that level. How can you make sure the candle closes above that level? Because you don't have a crystal ball, right? You need to be taking that long, either if it's so bullish above that level, that level is such a low probability that we're going to revisit that day that you are ready to go long right now. Either that, or you need to take it at the end of the day when there's so little time left that there's just no way that the price is going to close below that level. Now that comes with a caveat, obviously. Can you be wrong and the low probability happens and the stock does actually go below that level? Yeah, absolutely you can. And those times suck. It sucks when that happens. Because then you're long, you're below that level, and it's like, I waited all day, did all this analysis, blah, 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 but that happens. And more often than not, you're going to make money despite that. There are times where that's going to be a problem, and you were not saved by the market. But that's why the market analysis is so important. You can sometimes be slightly off with your entry, but if your market analysis is perfect, if you nailed the market correctly, the stock will go through that level the next day because it's carried by the market, it's carried by its own strength as well, obviously, and you're going to end up profiting on that. That's the goal here. We're trying to minimize mistakes. We're trying to be as diligent as we can be, but we're not always going to be able to like trade as if we have a crystal ball. You know, there's going to be times where you try to nail it and you're wrong. So, but by doing all these things, by doing market first analysis, by doing support and resistance analysis, by doing all these things, you're preventing those chances that you're going to be wrong and you're going to lose money on those trades. So the next thing I want to go over is trend analysis. This is going to be pretty quick because it's very easy to see trend analysis. So trend analysis is just what's the trend and when's the trend changing. So that's actually very easy. We can look at that on a longer time frame actually. So if we look here, we've got December of 2022 all the way to April of 24. So this is actually very easy. You just draw lines. Oop, I think I forgot how to draw lines. There we go. So you just do something like that. This is not an exact science, but it's usually quite clear. So you draw lines like that. Probably don't want to draw on earnings. Doesn't have to be perfect. It can have, times where it's breached. But this is, in general, a trend. What is a trend? It's a series of higher lows and higher highs. So does that happen here? Higher low, higher low, higher low, higher low, higher low. That's not really a higher low, but it doesn't continue breaking down. So that's what you want to look for. Higher low, blah, blah, blah. You see what I mean. So that's what you want to look for. You want to look for price action that's continuing up for an extended period of time. Now, why don't we pull up the weekly here? So as you can see here, Amazon set some all-time highs in 2021 that we are basically testing now in 2024, and it pulled back. It pulled back significantly during 2022 and then took off since then. So since 2022, Amazon has been on a nice bullish trend. But so with trend analysis, you want to be able to identify when the trend changes, or when it Not just when it changes, when it's down, when it's up. So, right here, I'm not going to zoom out further than this because you can already barely see it. But you can see here, let's just draw some imaginary lines in our head here. We can see that the trend is up, right? That's very clear. Trend is up. We're moving up. We have a consolidation here. Then, if we had a line here, would have been coming up all the way over here. This is a massive sell-off through that line. So, do you automatically say, now the trend's down? No, you don't. You want to see a rejection. A higher or a lower high is what you want to see. So what do we get? We get a lower high right here. August 15th, we also had one around March of 2022, so August of 2022 as well. And then we continue lower past those lows in May of 2022. That is a bearish trend. So then you draw your lines here. Again, we have the imaginary lines. We draw them here. You want to connect the higher or the lower highs, and you want to connect the lower lows. And then once that's breached, again, we want to wait to see if we get that lower high or higher low. Sorry, these are a little confusing. We want to see when we get that higher low, and then we want to continue up above that higher high, relative higher high. Obviously, not higher high, but relative higher high to this price action, and we want to continue above that, and then we have a bullish trend. This looks a lot more compressed than it actually was because this is the weekly chart. I just don't want to zoom out too much, and I wanted to give an example of a downtrending stock as well. So that is trend analysis. My recommendation with trends would be you want to buy or you want to go long stocks that are in an upwards trend. So, and that doesn't mean you can't go long a stock that's in an overall downtrend, but it just means you have to be more cautious, and I wouldn't give as much leniency to it. I would definitely be careful. So an example of that would be 3M, triple M, I like to call it because of the stock symbol. If we zoom all the way out, we can see this price action is horrific. It's actually horrible. Going back to 2021, which feels forever ago now. I know that you can't see anything here. I'm just trying to drive a point home. So, let me see what year this is if I can. 2018. Okay, so you can see here on 3M that this sucks. Like this is not a good looking chart, right? We've got some massive sell-offs. We haven't even come close to returning from the high from 2018. This is 2020, I can tell from how bad it is. And then we bounced 2021. We sold off further. We sold off further until this year. So why am I bringing this up? Well, I'm bringing it up because I just said that you want to be careful and you want to make sure that you're picking or that you don't give a stock much leniency that you like and is bullish and you want to take a long, showing relative strength when it's not in an overall uptrend. Like we just looked at with Amazon, we looked at the weekly chart, we zoomed out a bunch, we saw that overall, Amazon's in an uptrend. It's been uptrending over its life. But as we can see in the last 5 or so years, oh geez, it's even more than that now, but 3M is not doing well. Not at all. So, as we can see here from this May 1st candle that happened the day after its earnings, I would lean on day trading that and not holding it overnight just because this breakout is going to be tested. Because as we saw before when we zoomed out, I think this will be quicker if I click here. Yeah. As we can see before, there's a lot of price action over here where institutions felt that they should just sell the stock off. So it's fighting an upwards battle. Can it reverse the trend? Of course it can. Of course it absolutely can reverse the trend, but it's going to have more of a fight to be able to do that. And if it has that fight, you're going to want to give it the space to have that fight, and you're not going to want to beat it over the head and just try to bullheaded yourself into thinking that, this is strong, so I must make money. I would give it a short leash. That would be my thought on a stock like that. So that's why trend analysis is important. You need to be able to recognize the times where you can say, well, this stock has been in an uptrend for the last 10 years. If I give it some space here, could be okay. Does that mean give it too much space? Absolutely not. You need to be able to differentiate, how much space you should give it, what risk tolerance you have, all those things. We're going to get more into that in later videos. The next thing I want to go over is volume analysis. I'm going to try to keep this quick. I can see I'm already going on and on about this, but this stuff's important. So, even if this video I couldn't make it shorter, at least I can make it full of information, and I hope it's helpful. Okay, so volume analysis it's a little complicated, and here's what I mean by that. So there's a lot of different ways of doing volume analysis. Some people have indicators to tell them when the volume is above average. On Option Stalker Pro, this is one of those examples. This is the 1.0 vol indicator. What it is when this number here next to this is positive. When that number is positive, that tells you you're above average volume. So looks like this is not above average volume. Let's look at NVIDIA. Not above average volume. Let's look at Amazon. We just looked at Amazon, and that was strong today, or not above average volume. I just heard that mRNA is doing strong, and that's after earnings. So I bet you that's above average volume. Yep, we are above average volume on that one. So as you can see, that tells you when we're above average volume. So that's one way of doing it. Another way of doing it is just looking at the numbers. So I think it's a little bit easier to see on my platform. So we have, let's look at mRNA. So this yellow line here shows the average volume on the 5-minute chart. And as you can see, all these volume bars are higher than the average volume. Versus SPY, we've got only one today above that, and all the rest, this one almost made it, but they're all below average volume. So that tells me there's some low conviction today, which is not surprising at all, considering we have, like I said earlier, Apple earnings tonight, as well as economic releases tomorrow. So that's why we're not seeing the above average volume on SPY, but that is why you're seeing above average volume on mRNA, because they just had earnings. So that's another way of seeing average volume. Another way of seeing volume, or not average volume, but that's another way of seeing volume, or analyzing it. And another way of looking at it is just by looking at the candles. I can tell you right now that this candle right here, this first candle of the day, is probably larger volume than these next few. I can tell you that this candle right here is probably larger volume than the rest. Now, it isn't, actually. We can see that right here. It's not. So what does that tell you? That tells you that that's kind of a bit of a fake out. If I was, hesitant about going long, I'd be waiting for another candle. So sure enough, the next candle gets above that level, it breaks out, it does pull back, but it does show the volume is higher than all the rest of these candles, not put together, but individually. So that tells me that might be a significant level, and then we build off from it. It's nice. So that's what you're looking for with volume. You're looking for, you want to be able to distinguish it. And sometimes you can do that by just looking at the candles. I think I'm going to go into that later with my my live demonstration of reading price action. But the thing about volume analysis is it's not always super necessary, but you definitely want to be in issues that are above average volume. I mostly focus on the daily chart. I focus on short-term swing trading, which I will get into in a future video, probably the next one I make. But this, I really just focus on making sure it's above average volume. So with that, you want to pull up the daily chart, and you want to look at this, and you want to say, okay, are we above average volume? If not, or no, I want to say this, actually. this is what you want to think of. So here's why you can't just look at the average volume and say, are we above it today? Yes or no? You can't say that because what do all of these candles above the average volume mean? It means by the close, we were above the average volume. That's what that means. Now, that's not super relevant. I mean, it is relevant, but it's not going to be helping you when you're in the midst of a trade. When you're trying to find a trade, more than likely it's going to be like it is here. It's not going to be over that average volume because it's not there yet. So what you want to do is you want to know what the average volume on a stock is, though. So it looks like on this one, we can see over here, it's 3.75 million. So ideally, you want to be trading stocks that have an average volume. And I think this is 20-day, but let me just check. Looks like it's 50. So, okay, so you want to look for 50-day average volume to be above 1 million shares. That's bare minimum. Ideally, you want more. Because oftentimes when I trade things that are 1 million, it's pretty illiquid on the options and it kind of sucks. So you want to have greater than 1 million. You know, ideally, like let's look at NVIDIA. NVIDIA's 52. I mean, come on, give me a break. Google is 31. Microsoft 20. Well, let's even say some stocks that, you know, not are the top stocks in the entire market. Let's say 3M, which I've traded many times, 6 million. Let's say another one, First Solar, FSLR, 2.1. This stock can kind of be a pain in the ass to trade, but it's not bad in terms of volumes. 8 on Boeing. It's another one. mRNA was just mentioned. That one's cut off. Let me pull it up better. 3.7. I actually already went over that one. Let me just look at stuff that people are posting. CVS, or I just did not type in CVS there. CVS, wow, what a drop. We're looking at 9.8 million. So you get the idea. I don't need to keep pulling up charts, but you want to see greater than 1 million shares. And that's not hard to find. Like I just brought up a bunch and they were all above. You know, let me try to think of a stock that isn't like, there's usually a momentum play on this one. Oh, that one is. But I think you can see over here, it's way lower than that. You can see 35,000. That's horrendous. I don't know. It's hard to find ones that are below just because they're not, I don't log them in my mind mentally. I'm just trying to find ones that are, but clearly that's not going to happen. But regardless, my point stands that you need to have greater than 1 million shares, and that's really what you want to look for on the basis of the daily chart. A 5-minute chart, it's a little bit different, but it's still extremely relevant. You want to look at volume in the sense of if a high volume bar is closing in a certain direction, it might be meaningful if that bar then if another bar then closes below it with higher volume than this bar. That can definitely mean something, and you know might indicate a possible move in that direction. Say for example, this candle right here, we've got this volume here. If we had this candle shoot below it with higher volume than this candle, then that could be a sign that that's a legit move. If it doesn't have even close to that volume, you know, maybe it'll reverse before it closes, or maybe the next candle will reverse it. You need additional confirmation. So things like that. Volume does matter, but it's not, I wouldn't say it's something that I spend a tremendous time focusing on. I'm definitely more concerned with how the price is moving, how large the candles are. That's really what I'm more concerned about. So the next thing I'm going to go over here is I'm going to do a live demonstration of how I look at price action live. Okay, so in regards to price action, I want to show some live examples here in order for me to get my point across effectively. So with price action analysis, you want to be able to, or let me say this. With price action analysis, you have to be able to look at something live and be able to kind of have some perspective of what's going on here without, having the benefit of hindsight analysis. Like hindsight, I can easily say, oh, bearish trend. But like you have to be in the moment seeing that this is going to be a bearish trend day. Now, that's not very difficult when you're experienced, but at least based on what I remember from when I first started trading, it is very, 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 very difficult when you're starting to be able to tell the direction of what things are going to go in. So let me first give a few examples here. So we're going to start with an example of, we're just going to look at the market. So the market looks like shit. So we have an open here. We have a couple red candles bring us down to 500 level, it looks like. Yep, 500 level. We couldn't pierce the 500 level. And now we just have a compression. So what is the price action telling us here? The price action is telling us kind of a wimpy sell-off here, finding support around the 500 level. And, maybe this will act as support. We got to look for confirmation. Now, let's look at maybe another chart that can tell us a little bit of a different story. So now, you have SPY in your mind, you have the market in your mind, you know that it's sold off, you know that it consolidated, you know that it found support around 500 so far. Here we have Google. Google had a gap down, not a gap down, a gap up after earnings and has sold off a bit after that, but is showing some strength today. So we have an open a bit above the close from yesterday, and then we've got a little bit of a sell-off, and then it's not stack greens, but has some nice buying and showing some nice strength here. So what is this price action telling you? It's telling you that these candles, not the greatest strength, but it's definitely strong. You're seeing strength here again. The market is showing a bit of support here. So now that the market is showing support, it might break out of this small compression on the 5-minute chart. So there's a couple additional things that go into price action analysis. Let's go back to SPY to look at that. So there's a couple major factors in price action analysis that you need to be aware of that aren't as clear as just seeing candles and saying, I know what the direction is. So what that is volume analysis combined in price action analysis just by looking at the candles. So I actually don't have volume enabled here. Let me add that really quick. I literally just brought this chart up. Let's see, I like to use that one. Okay, so we've got volume now. So as we can see here, let's take a look at the size of the candle relative to the amount of volume. So as we can see here, these are pretty tiny candles. Most of these are tiny. Let's look at all the tiny ones. Here's the average volume. The average volume is about 700,000 shares. So all of these candles, the small ones, the smallest ones are all below volume, right? And then we've got the biggest candle of the day being the highest volume. Now, is that common? It is. So when you look at, I don't even need to see this here. Like, I'm not going to look at that. I'm actually going to block it off with my hand. You can't see me doing that, but just know I'm blocking off the volume with my hand. I'm going to go out on a limb and say, let's just look at some of these candles. I'm going to say, this might be a bit higher volume. This is a low volume. Maybe this is approaching average, this one right here, but I doubt it. Low volume, again, might approach the average. Low volume, low volume, low volume, low volume, low volume, both low volume. This is most likely high volume. Let's see how we did on that. Yeah, I mean, it looks like I was pretty spot on with that. And then, yep, that was above average. Okay, so you can see what I'm trying to say here. So when you're trading, you're looking at these candles and you want to be able to interpret what it means about essentially the market. So what I mean by that is when you see movement and you see it chopping back and forth like this candle is right here. I said, maybe we have support here, but who knows, right? I don't know if this is confirmed support yet. This is real time. This is not in the past. I don't know if this support is confirmed. I see that it bounced off this 500 level, which has acted as support and resistance in the past. Now, it could continue up. It could chop around here. It could go down. Couple reasons why it's not going to move, I think, is because we have the FOMC meeting at 2 o'clock today, which we're going to have the rate decision at 2 o'clock. And then we're going to have the press conference with Powell at 2:30. Now, it's highly unlikely that the institutions are going to want to have a lot of market involvement with that type of pending news. So that's why I don't think it's going to move much, but that's a fundamental thing. So let's just focus on price action here. So with this price action, your first thought should be that it's most likely going to be a low probability day. Now, if you see, price action like this on a stock, it's giving you a different story. We can see here that these candles are fairly large, not huge, but definitely probably above average volume. If we look, it is. And these are all things like they're hard to quantify, right? I mean, maybe it doesn't sound that way based on what I'm saying, but when you're trading, like maybe this sounds crazy to some people who might be watching this, but I rarely look at volume down here. I rarely look at it because I can tell what the volume is by looking at the candles. When I'm looking, this is the reason why I have this on the screen here. When I'm looking at the bid-ask spread on the price ladder, let's look at SPY because it's a lot more apparent. You can see the orders, right? You can see the bid and the ask. You can see how it's moving up and down with the price. Now, let me tell you, when you see a lot of buying coming in, you see it massive on the bid here, and you see it flying up, just absolutely flying up. And when I see that, I know it's high volume. I don't need to look down here. I don't need that. I know it's high volume just by seeing the movement on the price ladder. I know that for a fact. So, this is all goes into price action analysis. And as we can see here, we got now a red candle printing. Like I said, this is not confirmed yet. This could just go back down. Do I want it to? Obviously not. But, it's in a position where it could do either or. And I'm not doing anything right now. I'm kind of just waiting. I would love. I mean, here's my thinking with things like this. As of this moment, May 1st, 10:41 a.m., we're in a position where this could be a third higher low. And from a technical perspective, if the market was going to resume its move back to the all-time high, this would be a beautiful place to do it from. Is it going to do it? I have absolutely no idea. What I do know is that I cannot see a reason why the press conference at 2 o'clock will not be what tells us whether that's going to happen or not. I think we could get a big. No, I don't think we are going to get a big move. I don't know if it's going to be up or down. I hope it's up. I would love it to be up. If it's down, fuck it. It's got to do what it's got to do. But anyway, with the price action, with these candles and how they move, maybe there's some volatility here. Volatility is easier to show it on. So yeah, let's just take a moment to look at Tesla here. I don't like trading Tesla. I think it's kind of untradeable at the moment. But let's just take a look here. So let's observe for a moment. So you can see here, we've got the bid. Looks like it's higher or the ask looks like it's higher than the bid, and it's slamming down on the price. You can see it's not budging. It's slamming down on that. That's selling pressure. When you see that, that's selling pressure. This is all price action analysis. This is selling pressure here. When you see the ask directly on the price, now it's shifting. Now the bid is directly on the price, and now it's going up. That's price action analysis. So when you're seeing price move around like crazy like that, like all up and down, that is volatility. Volatility can be a good thing, it can be a bad thing for traders. Let me explain when it's good and when it's bad. Volatility can be good if it creates volume in the market and creates volume in a given direction. So if let's even short or long, doesn't matter. If the market is tanking at full steam, like dropping like a 500-pound boulder, that is a great market to short. That is a fantastic trend, and I don't like to say easy, but it's a hell of a lot easier than it is to trade volatility that's not good to trade. Now, volatility that's bad to trade is volatility born out of indecision or panic on how to address whatever event is causing indecision. So, if you have some kind of a market event that causes panic and causes institutions, maybe to not be so aligned in thinking of like how they want to address things and how price is going to move and how maybe their predictions are wrong, you're going to have a back and forth market, a choppy market. It's going to have wide swings up, wide swings down, all around, and it's extremely difficult to trade that. Especially if it's awaiting news, like today, for example, with the FOMC. It's extremely difficult to trade that because there's a couple components to it. There's the factor that you cannot necessarily rely on technical analysis fully because you have to take into account that the FOMC meeting, the rate decision, the press conference, it could change things. Could change how institutions now want to deploy capital. If that happens, that shifts the dynamic. And if the dynamic shifts, you're in a position where you better hope you're on the right side of the market. Now, hope is not a great word to be hearing from a trader. If you hear a trader is hoping, they're not positioned well. And being positioned incorrectly is extremely dangerous. That's why, there are calendars like this one. Let me just bring it onto the screen. I use this all the time on this dailyfx.com. I use the economic calendar every single day to look at the events, and I look at it in advance too. I try to look whatever a week or 2 weeks in advance, so I know what's going to happen. Today, we've got, and it tells you the effect on the market: low effect, medium effect, high effect. And I can tell you, I've been looking at the market since. Well, I first looked at it at like 5:30 this morning, but I've been looking at it for at least 5 hours, and this event did not matter, didn't impact at all. Neither did this one or this one or this one, but the one at 10 a.m. it did cause market movement, definitely did. And then I can tell you right now, well, that's odd that that's like that. Let me do that again. These two events are going to be massive market movers. So it's stuff like that that you need to be aware of as a trader, and you can't be caught off guard. It's not acceptable to be caught off guard by a planned news event. This information is not difficult to find, and it's not blocked by a paywall either. Lots of people, online who want to get into trading, they talk about like like a boogeyman figure, like, you know, there's this shadow government that's out to get them or something. They don't say that, but they say, like, you know, the institutions are out to get them, whatever. I'm just kind of making fun of them a bit. But you know, a lot of these things are out there for free, available to inform you of what's going on. And, you know, they're if an institution wanted to screw you, they can screw you, but they're not going to do it that way. You know, you know, they're going to make money for themselves. That's what they're focused on. They're not focused on, you know, Joe Schmo in Nebraska who just bought 10 shares of Tesla. They don't give a fuck. They don't care about you, Joe Schmo. They are concerned about their bottom line. They're concerned about their profits. They're concerned about their billionaire clientele. That is their main focus. Their main focus is getting as absolutely filthy rich as possible. They're not concerned at all with your small 10 share Tesla position. I can promise you, I'd bet every fucking dollar I have on that. I would. But regardless, you know, a little bit of a rant at the end there, but I think it's helpful, so I'll probably leave it in. But I hope that kind of gives a demonstration. You know, let's just last point here. We can see big volume, big move. We can see the candle moving up right here, real time here. Let's take a look at the price action on the price ladder. Okay, we've got a bit of a pullback on the candle. I'm just going to act like I'm commentating a horse race right here. We can see the ask is right down on the price. It's pushing it down. 1,000, you can see there. You see those pops. Okay, now we got the bid back on it. Oh, we got the ask back down again. You know, okay, so let's see, bids on it. I'm expecting a continuation here just because of technical analysis, but let's just see. So let's, you got 5 minutes. You can waste 5 minutes here looking at the chart. Maybe teach something. I don't know. Yeah, yeah, I don't know. I don't think I'm going to waste 5 minutes staring at this with you guys, but I think you get the point. If you're seeing the ask, big numbers right on the price, it's going to be pushing it down. If you see the bid right on it, it's going to be pushing it up. Can you make a trading decision off that? Absolutely not. No. You cannot make a trading decision on that because who's to say if any of that means anything? You know, every single thing that you do in trading is based off the charts. It's not based off this. This just gives you like maybe like two things that it can tell you. Can tell you if, okay, am I seeing volatility or am I seeing, you know, a high volume move or whatever. You know, and if you have like this is what I do sometimes. Actually, let me pull up. Let me see if I've got it. I don't have one in front of me. But what I can do, not sure if you can do this on other brokers, and, you know, there goes my technical analysis. It is going further up, but we'll see. It could pull back. I wouldn't be buying off this if it was me anyway. I don't know if you can do this on other brokers, but I can pull up the actual option from, you know, the options ladder, whatever option you want. Let's say, I don't know, 180 strike calls on Tesla expiring Friday. I could bring that up and put it on this chart. I could see the prices that they've transacted at on this chart, and then it would give me the price ladder, actually, of the option, and I could see the bid ask. I use that every single time to enter my options trades because I find that it's extremely beneficial to be able to know what the bid and what the ask is and see it right in front of me, like see it completely plain as day. And I know that typically I can get filled between those, but, you know, I try to sometimes get closer to the bid and see if I can get a better price. And sometimes it works, sometimes it doesn't. I would say more often it probably doesn't work, but that helps me try to get a better price because sometimes what do we see in options? And I'm sure those who trade options know this. You might see that the bid ask are super far apart, then they tighten. Then they're super far apart, then they tighten again. It's a back and forth. Well, I can see that plain as day on the price ladder, so it allows me to better enter those positions. But anyway, I just wanted to record a few minutes of real-time price action analysis. Hopefully that, you know, was a bit helpful. in shedding some light on how to look at some of this stuff in real time. Let's just take a look at SPY. We said maybe it's establishing support. Let's see if it still is. Sure enough, it clearly is. It could still pull back. Definitely not confirmed. I would not say this is confirmed. What would confirm that for me? Well, what would confirm that for me is if we pulled back to this level, bounced right off of it again, and continued up. That would confirm it for me. You might not get that. That's like in a perfect world. We always like to say, this is what I would like to see. I would say that oftentimes we don't really get what we like to see. We get something close or something, else that confirms it. Would I like to see a double bottom or a lower high, or sorry, a higher low? Yeah, I'd love to see that. Am I going to get that? Probably not. It'll probably do something stupid like do nothing until 2 o'clock, but whatever. Okay, so I just wanted to conclude the video there. I hope this was helpful in order to, improve your understanding of price action analysis and maybe understand at least how I look at it, and maybe that can help you, maybe not. Let me know if it does. Anyway, good luck trading out there, and try not to get caught in these crap moves in the market. Good luck.